Hello again. Welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thanks so much for tuning in. Really been appreciating all the comments and the support in the comments below, all the videos on YouTube. Been really enjoying doing this for you guys, and thanks for the questions. Going to try to get to some questions today. Before we jump into it, just going to say again, nothing in this video is meant to be investing advice. I'm not a financial advisor, and this is not financial advice. Always do your own due diligence when you make investments, and always take responsibility for your own choices. Awesome. All right, let's jump right into the daily scoreboard here. Pretty positive day out there for uranium. First of all, the uranium spot price slipping down again another dollar, $42 a pound mid-market as it closes out the week. The spot price of uranium has been ticking down over the past couple of weeks with the Sprott Physical Uranium Trust largely out of the market, and most of this is happening on very low volume trades. Seeing that tick down on low volume is not a concern whatsoever. We are approaching a strong season for uranium, which I'll get into in just a minute. But the Sprott Physical Uranium Trust yesterday, they added only a nominal amount of investor capital, but they did purchase another 100,000 pounds of uranium. Since the 17th of August, when their ATM went live, they have raised $460 million, and they have bought 10.9 million pounds of uranium. It's absolutely stunning. The end of the day yesterday was $7.5 million in cash. Turning to the ETFs, both URA and URNM reported no change in outstanding shares. They still sit combined with an AUM of just under $1.5 billion. And even though they had a pretty big pullback in the last couple of weeks, both of these ETFs ended the month of September really strong. URA up 13.5% for the month of September. URNM up 22% for the month of September, just huge. Even with these substantial pullbacks that we've had, the volumes have remained pretty robust as well. For the month of September, just over $393 million of new money came into these two funds. Pretty spectacular. Let's take a look at the charts. Starting off with URA, things are looking like they're turning positive after a short period of bottoming following that wicked sell-off a couple weeks back. It was actually 2 weeks ago today, this big Friday. And we're seeing a nice bullish candle on the day. All the moving averages moving up, including the short-term moving averages continuing to rise. MACD looks like it's trying to find a bottom. All in all, technically pretty darn positive here. Let's check URNM. Similar chart. Again, this one looks like it's holding up a little bit better than URA overall. The volumes are still pretty low, although relative to most of this year, we're still seeing pretty robust volumes, but compared to a couple of weeks ago, they're pretty small. This is what we're watching, folks. We're watching for these charts to find that bottoming pattern. We're watching to see if any moving averages or areas of support hold up. This one actually just went right through that 20-day, didn't even make it down to previous resistance. Honestly, we still have got a gap to fill here. Whether or not that happens, I don't know. We are right on the verge of seasonality here. Seeing the indicators show that we're at least finding a temporary bottom, and we're seeing a nice bullish candle print, but we're really looking for volume. We're looking for the sector to find that new bottom, that new cyclical bottom, and for volume to come back in. I want to look back at URA and look at the volume. Still very strong here, although much lower than it has been this past 4 weeks or so. Again, we're really looking for ETF volume to come in, and that's going to signal this next leg up. Let's take a look at Cameco. Same thing, overall strong volume, but declining. But it's looking like the buyers are overtaking the sellers here. And again, this nice bottoming pattern in the MACD looks very positive for coming weeks here. The Sprott Physical Uranium Trust. Similar looking pattern, although overall holding up much better. Again, this is mostly related to the spot price of uranium, considering that the spot price of uranium has slipped this past week substantially, and the stock has maintained a decent level here. So we're probably likely at a slight premium to NAV here. We are seeing that same kind of bottoming pattern here on the indicators, the MACD. And again, Sprott needs to be at that 1% or greater premium to their net asset value to issue shares. We'll have to see if they issued any shares today. They very likely are at a slight premium to NAV. Before I stop the screen share, I want to show you a couple of charts of the seasonality for uranium. This is a seasonality. I like to look at the seasonality for Uranium Participation Corporation because it more closely tracks the price of uranium and the seasonal fluctuations that happen for the price of uranium. Even though UPC used to trade at much larger discounts and premiums to NAV than the Sprott vehicle currently is, or will be, it still is a rough gauge of what we can expect for the coming months. And again, this doesn't play out perfectly every year. We're talking averages here. So some years it doesn't happen, some years it does. But for the most part, that we have a strong season from October through February. And my personal opinion is we will see that seasonality this year. I do believe that's coming. And I also want to show you the Cameco seasonality, which is even stronger. Obviously, this speaks to the leverage that miners have over the physical metal. So yeah, this is right around the corner, folks. Seasonality here starts in October. We're in the first day of October, and we're starting to see bottoming patterns in most of the equities in the uranium space. And most of the equities were slightly green today, even with spot ticking down. So if you've been a precious metals trader at all, then you oftentimes know that when the miners are outperforming the metal, usually that's a forward-looking indicator that the sector is about to turn bullish. Let's go to the mailbag and see if there's a question here for us. Justin, why can't I buy SPUT on the OTC market? So there's a new SEC rule that is requiring companies that are listed in the OTC gray, OTC pink sheets to update a certain paperwork in order to maintain their legitimacy in the eyes of the OTC markets. Now, the Sprott listing SRUUF on the OTC markets is not actually a listing that they took out. It's simply a reflection that allows the OTC traders to purchase there and transfer into units of U.UN. So it's not actually a legitimately listed stock. It's kind of a carryover from when UPC was listed there. With all of that said, they're going to get it in line, and I expect that trading will resume. You still, I believe, can sell shares that you purchased previously through the OTC brokerages, but some of them are at this point still limiting the purchasing, and I expect that will be resolved shortly. However, with all of that said, we always recommend to our newsletter subscribers that they trade in the securities that they want to trade in on the primary exchange for those securities. So what that means is if a stock is listed on the TSX or the TSXV, then those are the markets you should buy and sell in rather than the OTC markets that reflect. And there's a number of reasons for that. One, the liquidity is far greater on these primary exchanges. And the same goes for ASX and the ASX securities that are also OTC listed. So you have much greater liquidity, which means that you will pay typically a much smaller bid-ask spread when you're purchasing, and there's far more liquidity. You usually get a better price when you're selling. If there's not a lot of liquidity, you end up having to pay a large spread because there's just not as many sellers when you're going to purchase those securities. This is also a concern if and when it comes time to sell out of your holdings and you have a large position on the OTC. It might be so large that the sellers aren't sufficient to sell out at the price that you're hoping to get. So we always recommend trading on those primary exchanges. And for most people in most countries, you can access most international markets through Interactive Brokers, which is the exchange that the brokerage that we always recommend to our subscribers. It's the one that I use to trade on the TSX, TSXV, ASX. And so that's what we recommend. You always want to look for liquidity, even with smaller positions. Now, if you're trading with really small positions, you're just getting into it. You're in the States, you're using a TD Ameritrade or something similar. There's nothing wrong with that. You can dip your toes in, but as soon as you get serious about this stuff, you want to seek out that liquidity, and you want to take advantage of that when it comes to not only paying less on that spread when you're buying the stocks, but making sure that there's sufficient liquidity in the stock that you're holding for when the time comes to get out in order to maximize your gains when it comes time to sell. All right, hopefully that's helpful. Again, I want to reiterate that if anybody's interested in is not a current member in receiving a previous month's newsletter free sample, please send us an email, support@uraniuminsider.com. And we will send you out a previous month's letter for you to check out the type of content that we put out on a monthly basis. Our next newsletter will be out Monday morning, October 4th, before before the markets open, 6:30 a.m. on Pacific Standard Time. And that will be out shortly for members. And this weekend and every weekend, I update a watch list for all of the stocks that we own and recommend, that we go over the charts more thoroughly than I just did, obviously, and point out some levels to look for. And this last week was a fantastic opportunity, the last 2 weeks actually, for adding these positions. A number of the levels that I pointed out and a number of the stocks that we own and recommend hit those levels nicely. I added to my positions the last couple of weeks. I'm expecting, even if we see another 5 or 10% down, which is possible in the next week or two, don't really care. I'll add a little bit more. This is the time to position prior to that seasonality coming into play. So hope you all enjoyed this, and we'll see you next time. Have a great weekend.